Hey, welcome back. I wanted to cover ZIM, the big shipping company that over the last few years has really rewarded investors if you bought at the right time, sold at the right time, and stuck around for that big dividend. The current trade war is really upending the whole stock market, but it's even more dramatic for the shipping industry. ZIM has benefited from COVID, where we had a big supply chain constraint that really impacted the world supply chain, and the rates for shipping really went up. Zim really benefited during those times, made lots of money, and bought new ships. And more recently, they really operate well. I really like how Zim operates. They made so much money, they paid a whopping dividend, which investors just became ex dividend for and qualify to receive that dividend. But what's going to happen to Zim? And the big question is, when are these tariffs going to go away? And is it worth buying the Zim stock while things are really bad, really tough? And once tariffs get resolved, then I would expect the Zim stock's going to rally. So what I'm going to do is I'm going to reanalyze the company with a more pessimistic point of view and really bring down the numbers as much as I can and really put a bear case on the table, almost like a worst case scenario to see, is Zim worth the bet? Is the risk reward really attractive or too risky for this shipping company? So let's take a look at the company fundamentals, and then I'll do a valuation on Zim. Zim is a $1.5 billion market cap company, and its revenues are 8.4 billion. Shipping companies don't get a lot of love from the stock market. They don't have valuations like normal companies. They are very discounted if you look at the price to sales ratio. The forward PE is the same. It's a 4 forward PE, very low, very high dividend. They made lots of money and they just dividend the money out, which is a good idea. Although, if they need something new like ships and stuff, they should keep that cash around and make the company better. Overall, analysts think it's a sell, although it's discounted by 16%. The year to date, this stock's down 42%. It is really down, especially with these tariffs that just came out. The stock's down in the pre-market hours by 6%. So it's going to be below $12 per share. Not too long ago, this stock was riding high at $26 a share. So buying into Zim at the right time has proven to be a moneymaker for me. So I'm going to analyze the company and see if there's a good entry point for me. So when we look at the financials of the company, it's a boom or bust situation for them. When we had COVID and you had shipping rates really go up, the company grew 168%. Incredible. So they kept that size of the company for a year. And then they really came down due to shipping rates. Not that the company was poorly operated. And more recently, they grew at 63%. Now, my guess around these tariffs is that it's going to slow commerce down. Just, common sense. If you're going to have very high tariffs and we're not sure how long they're going to last, maybe companies are going to pause purchasing and importing of goods for a while just to see if these tariffs maybe last a month. Why would I buy product with this increased tariff for that month? I'd rather wait until the tariffs are kind of, done with, removed, and then I'll buy product at a lower price. That's my logic. Maybe that happens and it reduces the number of voyages that are needed. And if the demand goes down, the rates go down. And that's where you see a year similar to the one in 2023, where you had shipping rates really fall. The revenues for Zim would really fall as well. The company is well operated and efficient, and they produce tremendous cash flow. Part of it is because when they made all that money a couple years ago, they were smart and they bought new ships. They bought efficient ships. So their ships are less expensive to operate, which is a good idea. That way, even in tough times, they're still producing cash. The reason you would see a loss versus free cash flow being positive is the depreciation of those ships. It's a big expense against earnings per share, but it's a non-cash item. They've already been bought. So the free cash flow really shows up tall during tough times, and during the good times, the cash flow is really excessive. So overall, I still expect they're going to produce free cash flow even if times get tough. Only 4 analysts cover Zim, but they all think it's priced at a discount. Even the pessimistic analyst is at $13 a share, and the most optimistic is at $18 a share. Let's take a look at where they're expecting the growth to go. A total of 9 analysts weighed in on the growth in 2025. They're expecting that the business is going to contract by 21%. That's a pretty good contraction, and it's going to be followed by another contraction. Now, that number isn't too bad, and I expect that they're still going to be cash positive, and they are going to lose a little money in 2026. But again, most of that is depreciation. I'm not too worried about it, especially if we have a situation where the tariffs cause a contraction globally where you have fewer goods bought for maybe a year, and then the tariffs get resolved and there's more demand. They got to fill the empty shelves at warehouses, at stores, and basically in supply chains in the US and around the world. Well, that increased demand would create a very good scenario, maybe in a year from now, or once tariffs get resolved, there'll be greater demand because companies and overall enterprises will be eager to fill their inventories. So that might be that we have a bust, short term bust, lowering of revenues, and we have a longer term boom where we have excessive demand, higher shipping rates, and then ZIM stands to make lots of money, maybe in a year, 18 months from now. Now, let me value ZIM and see where their intrinsic value is. Overall, ZIM is a riskier stock, which is why I'm going with a 15% discount rate. A couple of reasons. One is they're out of my home country, which is the US, and they're in the shipping industry, which is almost near the epicenter of all these tariffs and the industries tariffs will impact. So it's a high risk stock. So I want a greater rate of return when I do a valuation. And I think that their revenues are going to come down, and therefore it's going to bring the cash flow down as well. So I'm lowering their trailing 12 months cash flow by 25%, and I'm going to keep lowering it by 25% for the next 4 years. That's a pretty conservative expectation. It could be worse than that, but it could also be far better, especially if the tariffs get resolved in maybe a month or so. The stock's going to do a lot better because we're going to get back into a more normal free trade environment and the cash flows would be better. But for now, I want to be conservative and bring down the cash over the next 4 years. Then after that, they'll just grow in terminal value by 3%. When I use those numbers, that forecast, and discounted by 15%, they get to an intrinsic value of those cash flows of $10.2 billion. I add cash and take away debt, and I get to roughly $5.5 billion of equity value, much higher than the market value. The market does not price shipping stocks like it would, price a typical company like a 3M or a Google. It really discounts shipping stocks. So it shows a very high discount based on cash flows. So for the ZIM stock, it's best to pick a very low acquisition price. And when I buy that stock, I already define the exit strategy. It's typically once I make 50%, I'm out. I don't ask any questions. I just get out because typically this stock goes up and down based on, I think, the overall market perception and opinion of what's going to happen. They don't look at fundamentals. But in the meantime, ZIM will continue to pay that dividend and be an attractive stock overall. When I look at their earnings per share, it kind of shows that the stock is somewhat fairly priced, only with the 11% premium. Overall, it's just a very discounted stock. But again, the market doesn't price shipping stocks like it would a normal business. So overall, I'm a buyer of ZIM stock. I think buying at these really low levels have proven to be a profitable venture for me. I've invested in ZIM before, made a nice return of like 50% in literally 4 months. I also invested in a company by the name of Panel, PANL symbol, and I tripled my money on that stock. So I have a little soft spot in my heart for shipping stocks because they've made me money. We'll see if this time around they make some money for me. But I think it's getting to the point where it really is a very good risk reward situation for me. So that's my video on ZIM. I hope you found it interesting. Let me know what you think of ZIM and what you plan to do with the stock. It'd be interesting to read that. And please consider becoming a member of the channel. You can get those details on the description of the video, and you can become a paid member of the channel. It'd be great to have you join the member calls and interact with you far more. Thanks for watching, and good luck investing.